In this video, I'll cover everything that you need to know about QuickBooks in order to get up and running with it. You use QuickBooks to record transactions. Transactions go into accounts and accounts are listed in the chart of accounts. Go to the accounting menu and select chart of accounts. From here, select the new button and then select the type of account that you are trying to create here. Select the save account under and I'll be saving it under fixed assets because I'm creating a vehicle account, which is a fixed asset. Select the type of account that you are creating, which is vehicles. This can help you later in calculating the tax, and this can also help your accountant in figuring out how much tax you owe to different agencies. Enter in the name of the account, input a sample description. The opening balance summarizes all the transactions that came before the starting date. So if you are moving from a different accounting software or you accidentally forgot to create this account, you can use the opening balance option to get started with this account in QuickBooks Online. Once you have verified all of the information, go and take a look at the balance sheet preview. This preview shows you where the account will appear in your balance sheet. Once you have verified the information, click on Save. You can manage your customers and store their information in QuickBooks so that you can easily send receipts and receive payments. QuickBooks has a very clear, simple, and intuitive way of adding customers. You can head over back to QuickBooks and go to the Customers and Leads menu, then select Customers. And here, move your mouse over to the New Customers button and click on it. Now you can see that there's a template that you need to fill in with all of the information. The information that you fill in here can be later used to create invoices and sales receipts quickly and easily. Now enter the details for the customer and start with their name. Customer display name appears in the list and reports inside QuickBooks. You can also enter the email address for the customer, and this email address can be used to send sales receipts and invoices directly to the customer. Enter name to print on checks. QuickBooks will override the default name and use the name you input here on the checks created for this customer. Now here's a very handy feature. If this customer is a sub-customer, then choose the parent customer for this customer. Let us take an example here and see the main use case of the sub-customer feature. This customer is one of the several stores that belongs to a franchise. So the franchise can be the parent customer with multiple sub-customers. Input the billing address and the shipping address. You can send the invoices and sales receipts to the billing address and the products and services to the shipping address. And that makes sense. But if both those addresses are the same, you can mark the option that the shipping address is the same as the billing address. You can also input reports as reminders and memos for this customer. If you need additional information on this customer, such as their preferences or contracts that you both have agreed upon, then describe them here. And you can attach documents related to transactions and contracts. Now choose the primary payment method if the customer has a preferred payment method. You have several options here such as check and cash, but you can also add new payment methods and save them in QuickBooks. Now let's move over to terms, which are very important, especially if your customer is buying on credit. The terms specify the number of days the customer has to make the payment from the date of invoicing. So here's the thing. QuickBooks already has a number of pre-built payment terms. Net 30 implies that the customer has 30 days to make the payment, whereas net 60 means that the customer has 60 days to make the payment. You can also select the delivery method for sales form. You have four options here. You can choose to print them later, send them later, none, and use company default. Select default language for the customer. And this is a really great option if you have multilingual customers from different geographies. If you have customers from different geographies, then you can select a default language that will be used whenever you send them an invoice Now this language will be specific to this customer. We are almost done here. You can input additional information for the customer. So this can be stuff like the customer is a wholesaler or a retailer, and you can also select the type of customer, if it is a business, if it is an individual. This is a handy feature, especially when you use it to filter customers in reports or in lists, and then you can click on the save button. The customer will now appear in the customer list so that you can create sales forms and record transactions quick. However, on the flip side, you have vendors from whom you will purchase products or services. You can use the vendor information to create and send purchase orders as well and pay your dues on time. Head back over to QuickBooks Online, and at this point, you can go to the expenses menu because we are going to add vendors. So select vendors, click on new vendor, input the vendor display name. If the vendor is a corporation, then input the company name, which is an optional field. Input the contact details such as email, phone number, fax, etc. QuickBooks can use this information to automatically populate the fields in forms such as bills and checks. And you can send purchase orders directly to the email address that you store for the vendor. While the name in the display name as appears in lists, forms, and reports, the name you enter here will appear on the checks that you print out from QuickBooks. You can also input the address. Whenever you need to send payments and hard copy of purchase orders, you can do so to this address. However, this field also is optional. QuickBooks has this very lit feature. If you click on the preview address link, it will redirect you to Google Maps where you can view the actual location of this vendor. Notes about the vendor can serve as a reminder whenever you are creating a purchase order, bill, or check for the vendor. You can add a soft copy of contracts or agreements between you and the vendor. And if the vendor is a 1099 vendor, then click on the track payments for 1099. 1099 vendors must meet these two criteria. You have paid them $600 or more during the current financial year and they aren't incorporated. You have to enter the business ID number for incorporated vendors and social security number for independent contractors. Input the billing rate if previously agreed upon. If you and the vendor have agreed upon a billing or expense rate, then enter it here. When you create bills, QuickBooks will automatically input the information. Input terms if you purchase on credit. Cre- Terms define the number of days that you have to pay the amount to the vendor. You can attach a copy of this agreement in the Add Attachment section. And then input the account number and move to set the default expense category. The expense category simply helps you to organize your data better and automatically. If you owe the vendor, that is, you haven't paid all your dues like a Lannister would, then input opening balance and the as of date. The opening balance summarizes all the transactions that happened before the as of date. And then add custom fields. Custom fields can provide additional information. They are generally used to add data points that can be used later to filter the data when creating reports. And let me tell you, this can come in really handy if you create a lot of reports. Click on Save. You can now view the vendor in the vendor list and use the vendor name when creating forms or reports to quickly populate required fields. Although imperfect, QuickBooks gives you all of the core features to manage your inventory. And we are back in QuickBooks. We'll go to the sales menu and select products and services. and on the right top corner, we'll click on the new button. You have 4 options here, and here's how they work. You can select inventory items for when you have to track the inventory count of the item. These are the main items that you will be selling to your customers. Then you have the non-inventory items, which you don't have to record or track. These are usually petty items such as staplers, pins, sticky notes. And then you have the services for when you have to record services instead of physical products. You can select bundle for when you need to add multiple products that you sell as a bundle. Input the name for the product and attach a product image. Then move on to input an SKU and select a category for this item. SKU is the stock keeping unit. It is a unique identifier for an inventory item that makes it easy to track inventory count. The category establishes a category for the product or service, so it makes organizing your data easy and efficient. You can also select the appropriate inventory asset account. QuickBooks uses the inventory asset account, which is a standard account if the user doesn't specify another account. Generally, you will create multiple accounts which are sub accounts for the inventory asset account so that you can better organize and analyze your data. Next, you can input the initial quantity on hand. The initial quantity on hand is the opening inventory, and you add additional inventory to it in order to get to the cost of goods available for sale. Remember to perform a physical inventory count before adding the item. If not, create an inventory adjustment journal to record the inventory. You may have to discuss this with your accountant first. Then choose the as of date. This is the date on which you counted the inventory for this item. When you input the reorder point, QuickBooks reminds you to stock up on this item if the inventory count falls to the reorder point. Input a description that shows up on the sales form, such as sales receipts and invoices that you create for this item. And you can input the sales price rate, which is the price that you sell the product at. Select the income account for posting the revenue. QuickBooks will post the amount of revenue earned from this product to the account that you select here. Sales of product income is the default account. Input the purchasing information. The description here will appear on purchase orders that you send to your vendors. The cost is the cost price of the product, that is the price at which you purchase the items. The expense account is the account in which QuickBooks will record the expense when you sell the product and match the expense according to the matching principle. You can also select a preferred vendor. This is optional, but it makes the process of creating and sending purchase orders easier. Once you have verified all of the information, you can click on Save and Close. You can set up sales tax if applicable. Once it is set up, you can track sales tax and calculate it using reports. Head over to the taxes option, then select sales tax. Click on Get Started. While setting up sales tax for the first time, the screen comes up. However, if you or another user with access to the company has already set it up, then you'll go straight to the sales tax center. Select the pencil icon to edit the default business address. QuickBooks is displaying the default address that you entered while setting up the company. However, you can change the address here. Once you have made the required changes, click on Next. Mark the tax rates related to the same tax agency. Select the tax agency, then click on Apply. You can also click on the drop down in the official agency name column and select the correct option. With a drop down in the official agency name column, You can select the agency for a single tax rate and then click on Next. Review the rates and click on Save. In the later sections, you'll learn how to add additional sales taxes. No. Click on Continue. QuickBooks will show you that the features QuickBooks will show you the features that you have access to now. Click on Continue, then Next. Click on Continue, then View Sales Tax Center. Now we are back in the Sales Tax Center, and here you have to select the frequency for filing the tax forms, that is monthly, quarterly, or yearly. The good thing is that you have the breakdown of these requirements as per the agency and tax rate, and of course, you can cross check the information and learn more from the reference link given below. QuickBooks will use this info to create sales tax reports. Click on Save and we are done. Select the frequency for paying the sales tax. When you access the sales tax center for the first time after setting up sales tax, QuickBooks will prompt you to choose the frequency for filing the sales tax. Choose between monthly, quarterly, or yearly. Go to the link in the sources to verify the latest information for the relevant tax agency. Now, QuickBooks, of course, automatically updates the latest tax rates so that you have the latest information available for filing and calculating your taxes. But you can still verify the information. Click on Next Agency, select the filing frequency for all tax rates and agencies. Click on Save once and you have selected the filing frequency for each of the tax agencies in your company. Click on the Select an Agency drop-down to switch between different tax agencies. And you can create reports for sales taxes. Now that we have activated sales taxes, we can record transactions. Let's move to transactions. QuickBooks has inbuilt templates that you can use to create forms such as invoices, sales receipts, bills, and checks. I'll start with an in-depth explanation of invoicing and then give you a quick overview of all of the other available forms because the workflow for most of these forms is somewhat similar. Because invoices have a somewhat different workflow, and that's for a reason. Let's start off by creating an invoice and I'll explain it as we go along. Go to the new menu and select invoices from the customer column again. Select a customer from the drop down menu. You can add a new customer or choose one that you created earlier. When you select a customer, QuickBooks again populates the fields in the invoice with the information stored for that customer, and you have already seen how it does that in sales receipt as well. Choose to send later with other invoices or to send immediately. With this feature, you can tag the invoice, which allows you to later filter it with these steps by simply going to all sales list and select filter by delivery method. Now that we are done with that, and now we move to the net terms, which are very important because net terms are the number of days in which the amount will be due. Net 30 specifies the customer has 30 days from the invoice date to pay the amount. On the basis of the invoice date and terms, QuickBooks will automatically calculate the due date, and whenever you create aging receivables report, QuickBooks will pull up the data from here and display the required information. Tags enable you to further categorize data so that you can filter them out from lists. And in reports, you can also select product services that the customer purchased. You can enter one product or service per line, and you can add multiple rows to the invoices, and you can add as many rows as you want to add additional items. You can add additional details or modify them. Additional details include the description, quantity that the customer purchased, the rate at which you sold the product, and the total amount charged will automatically be calculated on the basis of quantity and the rate. You can mark the checkbox in the tax column if the item is taxable, that is, you need to pay a sales tax on this item. You can also enter a message to be displayed in the invoice. When you give or send the sales invoice to the customer, this message will appear on the invoice, and generally you will input the summary of the transaction here. And for your own benefit, you can input a summary of this transaction The summary will appear in the next statement that you create for this customer. You can record discount as either a percentage or an absolute value. When you enter a discount percent, QuickBooks calculates the absolute value and deducts it from the final price of the invoice. Select the sales tax rate for this invoice if you have selected items as taxable. If none of the items are taxable, then you can skip this step and then attach any relevant documents and receipts to keep documentation of the transaction. Click on save. Now you have several options here. You can click on save and new, save and close, and save and share. With the save and new one, you can create a new invoice. With save and close, you will be redirected to the dashboard or the invoice menu. Now this is where the workflow between sales receipt and invoice changes, because with an invoice you need to receive the payment from the customer. Now when the customer pays you back the due amount, you will go to the new menu and click on receive payments, enter in the details for the customer and select the invoice that the customer paid. You can then select receive invoice and QuickBooks will mark the invoice as paid. Creating an invoice allows you to keep track of your sales on credit. It is like writing an IOU for your customers, ensuring you remember to collect what is due. When your customers settle their invoices, you receive payment. This keeps your income records up to date, and who doesn't love that chime of incoming funds? After professional estimate for potential jobs or projects, this tool helps you and your customers agree on costs upfront, preventing unpleasant surprises down the line. A credit memo comes into play when you owe a customer. Maybe they returned an item or you gave a post-sale discount. Either way, keeps your customer relationship transparent, balanced, and it keeps your customer hooked to your business. Use sales receipt when you make a sale and get paid immediately. This way, both you and your customer have a record of the transaction, making things clear and transparent. The refund receipt option: in the event you have to refund your customers, the refund receipt helps you to manage your books and keeps your customers happy. Track discounts or services you plan to give customers in the future with delayed credit. It helps ensure you remember those promises you made during the sales process. If you provide a service or product now and plan to invoice later, use delayed charge. It helps maintain a record of those billable amounts that are yet to be invoiced. Track your company's spending using expense. Track your company's spending using expense, whether it's office supplies or a business line. Recording every penny helps keep your business under control. Paid a vendor via check, use a check to record it, keeping your account balanced and your checkbook reconciled. Whenever you receive a bill, log it using the bill option. It keeps all your payables organized and ensure you never miss a payment. When it's time to settle those bills, payables comes into play. Track your payments easily and keep your vendors happy. And when you need to order inventory or services, the purchase order option is your best friend. It helps manage orders before they become bills. If you receive a refund or a credit from a vendor, use vendor credit. It ensures your next purchase or bill payment is accurate. If you have made a return and got a credit on your credit card, credit vendor credit lets you record this because money back should never go unnoticed. Need to print checks? The print checks option makes it simple. Keep your payments professional and traceable, and you can print multiple checks at a single time. Let's get into the employees section. When you pay an employee or a contractor for a one-time job, use single time activity. This helps manage payments and keeps your payroll correct. And the name is also very intuitive and practical. Now to the project section. Whenever you are starting a new job or task, create a new project. This keeps all your expenses, time, jobs and estimates. Estimates help you and your client or customer figure out the total cost of a project. This tells your client what to expect and helps to identify the total cost of the project beforehand. The other section has a variety of different options that are important to understand. Remember every little thing you need to do with the tasks option. It is your built-in reminder system in QuickBooks, so you can focus on what you do best. If you made a deposit at the bank, record it with bank deposit. Every dollar counts in keeping your books balanced. If you are moving money between accounts, use transfer. Because knowing where your money is just as important as knowing how much you have. Then we come to journal entry. For the complex transactions that don't fit any other categories, use journal entry. This ensures even the most complex financial moves are tracked. And whenever you need to record an adjustment entries, journal entries will be your best friend. The statement, and whenever you need to know your financial standing over a period of time, statement generates a report, keeping you informed and ready for decision making. The inventory quantity adjustment option is a little complex. If your actual inventory doesn't match what's on your books, Inventory quantity adjustment helps you correct it. Accurate inventory equals accurate finances. The batch transaction option. When you are handling a bunch of similar transactions at once, use batch transaction. It helps save time and keeps your books tidy. And next, when it's time to make a payment on your business credit card, select the pay down credit card. This helps you track the credit card payment because staying on top of your debt is key to good financial health. If you are a bookkeeper or accountant, you have to prepare financial statements. And if you are a business owner or investor, then you need to analyze the financial statement for insights. The balance sheet gives you a quick snapshot of the financial health of a business. Here we are looking at the balance sheet of Craig's Design and Landscaping Services as of June 8, 2023. The balance sheet provides the breakdown of assets, liabilities, and equity. Essentially, it represents the accounting equation which states that the total assets must be equal to the sum of total liabilities and total equity. First up, we've got our assets. This is all the stuff that we have got in our pockets. Think out think of it as what the company has in its piggy bank. We have got our current assets. This includes things like money in the bank and what customers owe us. It is like checking under the couch cushions for spare change, except these cushions are pretty plush. Then we have fixed assets. This is the stuff like trucks, equipment, plant, and property that we plan on keeping around for a while. You know, like that old recliner you just can't part with because it's still doing its job. Now let's flip the coin and take a look at liabilities. This is everything that the company owes. We have current liabilities like bills we have to pay soon, our credit card balance, our short term loans. These are like our monthly rent or that friend you have to pay back for last weekend's barbecue. We also have long term liabilities. This is the money we owe but don't have to pay right away. It is like a mortgage on your house. You know you owe it, but you have some time to pay it off. And then we come to equity. This is basically what is left after you subtract what you owe from what you own. If we sold everything and paid off all of our debts, this is what the owners would walk away with. It is like selling your old car, paying off the car loan, and the money left is what you have for that much deserved vacation. If a balance sheet isn't balanced, something is wrong and you have to investigate it further. The balance sheet is used to calculate a number of financial ratios such as the current ratio, the quick ratio, and these financial ratios basically help you and your investors and other financial institutions in figuring out the viability of your business and the future of your business in comparison to the industry standard. Income is the lifeblood of any business. It is the dough coming in from all the goods and services that a business provide. For Craig's Design, we have a few types here: design income, landscaping services, and pest control services. Think of income like winning a jackpot. Each one of these is like a different game paying out. But there's also discount given. Yep, sometimes you have gotta sweeten the deal for the customers. It is like giving your buddy a break on the price of that old baseball mitt you're selling. Let's not forget about sales of product income and services. It's all adding up to the total income, the whole enchilada of money coming in. But wait, we can't stop there. Let's talk about the cost of goods sold. This is what it costs us to deliver our services. Think of it like what you pay for the pizza ingredient when you're selling the whole pizza. The cost of goods sold is recognized whenever you sell an inventory item, and this is because of the matching principle. Now, you subtract the cost of goods sold from the total income and you get to the gross profit. This is the real meat and potatoes, what you have earned after covering the basic costs of doing business. But there are more expenses. A business needs to pay for things such as advertising, automobile fuel, insurance, job expenses, and even meals and entertainments. One biggie here is the legal and professional fees. That's stuff like hiring an accountant, a bookkeeper, or a lawyer. Can't skip the fine print, am I right? Then you have got your utilities, things like gas, electric, telephone. You have got to keep the lights on and the phone ringing, and so you need to pay the bills. Once you subtract the expenses from the gross profit, you get to the net operating income. It is like what's left in your pocket after a day at the fair. What you took in minus what you spent. Now there's other expenses to consider. Let's say it is stuff like that random lottery ticket you buy now and then. Once you subtract this from your net income, you once you subtract this from your not once you subtract this from the net operating income, you get to the final piece of the puzzle, that is the net income. And here we are at the final piece of the puzzle, the statement of cash flow, which is essential for all small businesses because, as you know, cash is king. First up, we have the operating activities. This is the cash generated from the day to day grind. It starts with the net income, the bottom line profit that you take from the profit and loss statement. Then you have to make adjustments for non cash items and changes in working capital. Think of it as cash in, cash out from the regular operations. For example, you have got adjustments for accounts receivable and payables, inventory, prepaid expenses, and various payables. So every non cash transaction that you added to the net income gets removed. Every non cash transaction that you removed from the net income gets added back. So this is basically reversing all the non cash transactions to only have the cash value of the net profit. The final value gives us the net cash provided by operating activities. Operating activities again are the main activities that a business needs to engage in to provide products and services to their customers. So these are things like marketing, distribution, manufacturing, and operations. Next, you have the investing activities. This isn't stock market investing per se, it is the cash spent or received from buying and selling assets like equipment or property. The thing, that goes into the fixed asset section of the balance sheet. We can see that they spent some cash on a new truck. It is like buying a new grill for your summer barbecue, a necessary investment for the future. Then we have the financing activities. This is where we track the cash from investors or the cash paid to owners and the borrowing or repayment of loans. In this case, we can see notes payable and opening balance equity. Think of it like getting a loan from that shiny new car or repaying your buddy the money you owed him. This gets us to the net cash provided by financing activities. It is like figuring out how much you have left after paying off your credit card bill. Lastly, we add up the cash from operations, investing, and financing, net cash increase for the period. We add this to the cash at the beginning of the period and we get the cash at the end of the period. And QuickBooks has a lot more to offer. You have customer and vendor reports, income and expense reports, and the audit log to view the history of the actions for all users. And if you want to learn more about QuickBooks and other related software, then subscribe to our channel for more awesome content.